Hey everyone, Chris Johnson with Money Morning. Palantir is trading more than 30% lower over the last week, following a couple of news reports that we're going to talk about for a minute. But more importantly, where do you buy the dip? I've got 3 different buy the dip trigger prices. I'm going to go through the chart and explain each one of those trigger prices, as well as a little bit of an outlook on the stock. And yes, this is still one of the undervalued stocks out there in the AI service world. So we're going to take 5 or 10 minutes, look at all of this information. You'll be a wiser investor for it. Let's jump into it right now. All right, everyone. Like I said, give me about 5 or 10 minutes, and we're going to go through a lot of information on Palantir. At the end of the video, you're going to have actionable prices that you want to look at in terms of buying the dip and a strategy. I'm even going to throw in a little bit of a bonus. One of those strategies that I use to leverage a stock like Palantir, just did on the last run and had great success with it. I'll just throw that out for you. We'll get a little bit of education on that as well at some point. But let's talk about what's been going on with the stock. Palantir has kind of had a Jekyll and Hyde moment here over the last 3 or 4 months. If you recall, looking over the last 3 months, back in November and December, Palantir was taken off. Let's not go through the bullet points. Let's go through what matters, and that's the chart right in here. We saw a little bit of a run up in the stock, and that was because the company came out with another one of their beat and raise quarters. And what I mean by that is the company comes out and beats earnings expectations, and they raise their outlook. Now, keep in mind, Palantir right now is not in favor with Wall Street. Wall Street does not have buy recommendations. They've got low price targets on the stock, so the expectations are low. When Palantir comes out with a meet and raise, that means that the company is going to start rallying wildly because retail investors are piling into the stock. That's exactly what happened after that November 4th earnings report. Stock took off and traded up into that top that we saw in December. Now, you got a little bit of an extra push in those Palantir shares because the company was joined into the NASDAQ 100. So, had been trading in the S&P 500 and was one of the larger companies there, but in December, the company switched over to the NASDAQ exchange. It made it available to trade in the NASDAQ 100. That is the large cap technology ETF and the index. Your companies like Microsoft, Amazon, Google, Tesla, the magnificent are at the top of that list. Well, guess what? You've got Palantir that is now in that list, and they're one of the major market capitalization contributors to it. So that's why we got that little run up into the end of December, December 23rd and 24th. They were added to the NASDAQ 100. Now, think about this for a minute. That's great news, and investors knew it was coming up probably about 2 weeks ahead of that, maybe 3 weeks ahead of that. So they were buying the stock. We saw a buy the rumor drive the stock higher into that December top, and that's when you get that little roll over in the shares. Once they get added into the NASDAQ 100, you buy the rumor, you sell the news, and that's exactly what investors did. You saw a 20% pullback in the stock. We touched down on that 50-day moving average. You're going to hear me talk about that quite a bit for the next couple of minutes, but that 50-day moving average, if you're unaware of it, it's this simple. The 50-day moving average is the best trend line that represents the trend is your friend. That simple saying that we say out on Wall Street, retail investors say it, the trend is your friend. Well, that 50-day moving average is the one thing. It's a way to quantify whether the trend is a stock's friend, and man, has it been friendly for Palantir. It's one of the most widely watched trend lines out there. So when we see a stock pull back to it, you're typically going to see support, technical support from that stock. And we got that, exactly that. You traded 1 or 2 days below it, but you can see the consolidation here, and then it was off to the races again. We had Palantir that charged into year end, and then in February, we got another one of those beat and raise quarters from Alex Karp. This one was a little different because if you noticed, Alex Karp has been out there talking to CNBC, out with the media, saying the analysts are on the wrong side of this. A lot of investors didn't expect that he'd come out with such a great earnings report, but that's exactly what they did. And you got another 50% rally from right here before that report up into that top. Now, what happened just last week? Well, we had the stock trading around $120. This was also in a way overbought, a technically overbought situation. So what we usually say is that's rarefied air. It's in a different strata, however you'd like to put it. But basically, the buying power has been exhausted at that point. So Palantir shares were getting a little bit tired, and then all it took was a little bit of a trigger to come through. And guess what that trigger was? Well, twofold here. It was Department of Justice coming out and saying, hey, we are going to be cutting, not increasing, but cutting our budget here over the next couple of years. And what they mean by that is it is going to be a 8% cut over the next 5 years, each of those 5 years. And this is under the bad right now. I'll go back to that chart in a second, but we heard Pete Hegseth say we're going to be refocusing 8% of existing defense funds to other areas in President Trump's agenda. So we're moving 8% out of the Department of Defense. They are targeting fraud and waste. And I think that's very important because now's how you apply this to Palantir. Investors, when they saw that news, instantly said Palantir is going to lose a bunch of contracts with the Department of Defense. Think about it. $3.3 billion right now in revenue for Palantir on an annual basis. That's growing at between 30 and 50% on a quarterly basis because the company is now bringing in not only those defense contracts but also retail contracts where he's getting them from private service industry, right? AI services are going out and helping other companies. But 60% of their business comes from the government right now, and the government has been very vocal about how well Palantir is operating within those government contracts, specifically the Department of Defense and also with the intelligence agencies. Palantir is efficient, and you've got the Department of Defense saying we are looking to get rid of fraud and waste. So investors kind of blew over this and said, this is it. They're going to cut some of those contracts. Palantir's going to lose it. The fact of the matter is, when you look at where the stock was trading at that time, in that rarefied air that I'd mentioned, all you needed was a little bit of something to go wrong, and investors used this as an excuse to sell the stock. Well, within 24 hours, you had another report that came out, and that was that Alex Karp was planning on selling more than $1 billion worth of the stock. Now, folks, I'm going to turn this screen off for a second and just talk to you and me for a sec. We don't need the screen. I'm going to tell you, I don't care whether it's Alex Karp, I don't care whether it's Bill Gates, doesn't matter, Elon Musk, whoever it is, the CEO that has been taking compensation from the company in the form of shares at some point needs to do something as simple as diversify, something that you and I do to our portfolios. Whenever I have my position in Palantir, and this happened, get up to be about 60 to 70% of my portfolio, and it started as 10. It was just that rapid growth of the stock that bolstered my portfolio and got it to the point where it was 70%. Any responsible investor is going to say, hey, I need to diversify away from this. I'm going to take profits and then reallocate them somewhere else. Why can't Alex Karp do the same thing? It's exactly what he announced. Less than 10% of an ownership of the company when you look at the amount that he's selling. This is a non-event. Now, I'll put it to you, when you're looking at insiders and they're buying and selling, don't ignore the insider selling. Don't ignore it completely, but it can be rationalized. When insiders are buying the stock, that is a much more powerful signal for the underlying company. Use that as a rule. You just learned something a little bit new. And then as we look at some of the politicians that are buying and selling shares, that's where you start to look at something that's a little differently. If they're selling that stock, then in those cases you want to look because maybe they do know something. But Alex Karp selling 1 billion shares, as big as that number is, it is a benign factor over the next 6 to 12 months. That's what the shares are going to be sold over that period. It is not going to be the thing that brings the stock down. So all of this adds up to the Department of Defense and Alex Karp, kind of these, I won't call them completely, frivolous or non-news stories, but they certainly were overreacted to by investors. This creates a healthy opportunity to buy the dip, a healthy correction in the stock. And anytime that we've seen that in Palantir, it is a situation where the stock finds itself up 6 months higher, a year higher. I've got an example here right now. But if you look at it, August 5th, 2024, we saw shares decline 27%. Down to the $21 level. I'll pull that up right here. There it is, from here to here. Look at that, resting right on the 200-day moving average. So some technical support and a 20% pullback. And if you bought that dip, you're up more than 315% year to date from that. So an example of how few times Palantir has given us to buy a 20% or better dip over the last year, and the benefit that you got from going in and taking that opportunity and running. Now, let me tell you real quickly about buying the dip. And there, a lot of people will say, well, pulls back $5 or $10. I don't care what the stock is. I'm going to buy that dip. Be tactical about it. And the prices I'm going to show you right now are much more tactical. There's a reason that the stock should be bouncing at those dips. We're at one right now. So be tactical. Don't just pick random numbers and then stick to them. If you say you're going to buy 100 shares at XYZ price, buy those 100 shares, but have a plan. If the stock goes down another 20%, you want to add to it. It's called dollar cost averaging. It's one of those ways that investors can lower their average price. So when the stock recovers, you're actually making more than if you just purchased the stock once. Keep that in mind. It's an easy and effective way to increase your return. So let's look at the three prices right now that I am watching. And I will say, I am still a holder of Palantir. I hold both the stocks and I have long-term options, leaps they're called, that expire in January of 2027. So I have a little bit of an alternative investment that allows me to leverage some of this move. I'll give you a strike and a contract you can look at right at the end today to consider the same type of approach. But here are those prices that I am right now actively buying myself and identifying for our readers as buy the dip prices. Your first trigger is right here at the $90 level. Shares of Palantir are trading at this level. It is a round number. When you look at a stock like Palantir, it's going to trade with psychologically round numbers. So $90, $80, $70, $60, $100. We didn't really see a lot of support. You can see that there was just a little bit of a pause on the way down here. But right now at that $90, you get the benefit of that round number. And remember, the trend is your friend. Right there's your 50-day moving average, folks. People will be buying. The algorithms will be buying on that 50-day moving average. So let's say, hey, CJ, what if it breaks through that? NVIDIA comes out tonight and misses on their earnings and the rest of the market comes down. Yep. Palantir is going to come down as well. They'll break through that level, and breaking through that will increase selling pressure. And now you're going to see the stock pull down somewhere around a $70 price. Notice that we had a $70 bottom right there in January of 2025 after we had that rollover from the addition of the NASDAQ 100. So your sell the news took you down to that $70. And in technical analysis, they like to look at the prices that have seen support in times past, and that $70 has done a little bit of that right there. $70 is your next buy the dip price. 75 you could also use as well, but really look at that 70 as a round number. And from there, this one's a doozy, folks. But remember, you want to buy these if they go on deep discounts. Some of these stocks will, especially more volatile. We drop down to a $50. That's where that 200-day moving average is. And if you were listening earlier, when I talked about that August pullback, here it is right here, 27% from there to there. And look at what came to save Palantir, the 200-day moving average. That would be another 50% pullback from where we are today. Sitting at 90, going down to $50, a little bit more than that, really. So consider that, and that, again, gives you a round number to look at, $50, and you get the benefit of that 200-day moving average. If Palantir were to fall back down to that level, I indeed would be a buyer of another round, adding equal amounts each and every single time to bring my dollar cost average on this down. Now, I mentioned to you that I would also show you a little bit of another strategy, and this at the basis here and looking forward on Palantir real quickly. Why would we want to be buying the dips? Well, this is still a contrarian bullish trade. What I mean by that is the fundamentals are strong. The technicals at 50 and 200 day are strong. And there's a lot of pessimism towards this stock. We've got analysts that just do not want to upgrade their view on the stock. And that is always bullish for a stock. Whenever we see Apple, Microsoft, where the analysts are just hanging out and don't want to upgrade, eventually they have to keep up or get back in line with the rest of the market. It's going to happen with Palantir. Right now, you've only got 21% of the analysts recommending it as a buy. When you look at companies like NVIDIA, it's 88%. So you can see the off balance there. Palantir, as it becomes more in favor with Wall Street, and those Wall Street analysts understand that the growth potential for the company over the next 5 years is there. You're going to see those upgrades go up, and that means that you're going to have a stock that's going to be driven by institutions at that point. So I'm positioning using that 50-day moving average priced at 85. That's that first one. Buy the dip at $75 is the second. 70 is my real target there. And my worst case on Palantir is that the stock drops down to its $50 level, which is the 200-day moving average. That would be my third buy the dip target. Consider using an option strategy, long-term leaps if you want to try to leverage or put less money into these. Don't trade less at some point. If you have a certain percent that you want to put into a position in your portfolio, you could still consider using a leap. Just figure out how many leaps you would have to buy to make up that amount. In this case, I've been looking at the January 2027, the 85 calls. They're currently trading at $3,560. If this goes up to $120 again, you're going to have a situation where this is going to be a $35 in the money option. And if it happened within the next 6 to 7 months or so, that option is going to be worth somewhere around 80 to 90% what you bought it as a return here, whereas the stock's going to be up 40% or so. So a great way to leverage that move back up to those highs. That does it. I can't make buy the dip any more simple for you when we look at Palantir. Will Palantir move higher over the next year? Absolutely. Again, I'm saying that these defense contracts, they're going to be a fraction of what people expect when it comes down to what Palantir may. They may not even see any cuts to their contracts at all because we've already heard the Department of Defense talk about how efficient they are with the work that they're doing in the Department of Defense. And again, Alex Karp sales over the next 6 months, simple diversification. You should be doing the same thing if you have a position that is 80, 90% of your net worth. Hats off to Alex Karp for doing a little bit of portfolio management. Until the next time, I'm Chris Johnson with Money Morning. Make sure you check out our 5-stock report. We send it to you every Monday. We've got a growth stock, a tech stock, an income stock, a stock under $10, and then also a stock to short that week. It comes out every Monday. You'll get it in your email box free of charge. Click on the link below, or you can scan the QR code that you've seen here a couple of times during the video. Feel free to comment down below, like, and add the video as well, and come back and see us. We love talking stocks with you. Have a great day, and I wish you the best trading success.